some things about Bitcoin and crypto markets. Specifically, is Bitcoin going to drop down to around 86K or pump back up to about 100K next? Well, if you look at the VEPS charts, if you look at the RMLRs, you can see pretty clearly what's going on. For example, if you look at the daily RMLRs, you can see the asset remains in mean reversion to the 3012 RMLR, currently above the asset. Now that RMLR, of course, has been slumping down a little bit over the past few weeks, as expected, really. And if you look at it intraday and day to day, and you see what the changes that were happening, it did exactly as expected in terms of the direction of each given day of the candle. And it is no surprise, right, that although, yes, we started out the mean reversion, where the RMLR was generally rising, right? I was very specific when I told you, remember, we don't care about the prices of the RMLR as an indicator, right? The price on the indicator, or the number of the value that it indicates on any given candle, is that number, and is a target if it's mean reverting or distributing, right, away from that mean or another one. But we care about the direction of the future RMLR. And if you look at the daily time frame directions of the RMLR, you will see that since the mean reversion has been in progress, right, 2 days after it stopped hitting that downside band on that third standard deviation of the 3012 RMLR back in early December. It was on a Saturday that was the third day that it wasn't hitting that band anymore. So on that Saturday, it was in mean reversion. Well, since then, it has been in mean reversion, and the daily RMLR candle has been spot on in terms of its direction. Absolutely spot on, right? In terms of it predicting the future direction. Why? Well, that's what the daily RMLRs do. That's what every RMLR on every time frame does. And they do it with remarkable accuracy. And when there's a change in the direction, which does happen, because there are statistical outliers and there is randomness, right, we see it reflected and we notice it and we know that it's happening, and we even have a correlation coefficient indicator built into the RMLR, and even a significant correlation indicator built into the RMLR, so that we can see when there's a change that is happening and whether that change is significant or not, and whether that change is a positive correlation or a negative correlation, right? So it doesn't escape us. What is this? What's your name? Emma. Hello, Emma. Hi. Welcome. So is it any surprise that Bitcoin's been wandering over to the side, kind of, after dipping down a bit from the 108K high? No, it's not a surprise at all. In fact, I even pointed it out and drew it for you guys with that silly little pen tool. I drew for you guys a random squiggle to show you how it might randomly walk to the side with little dips or little pumps or little just sideways action, or a combination of all those things, and how it might eventually walk into the RMLR at some point over the coming month. Well, we're now approaching that time where it may very well do that in the coming days. And when you look at the power means, the 30 power mean and the 33 power mean on the daily time frames of Bitcoin, you will also notice that the daily power means, 30 and 33, for example, are walking right into probably the 1110 RMLR Monday or Tuesday of this week, if it happens. Now, it could be that it does not happen if the height of the RMLR changes tomorrow or the next day, or both. or even today, right? Because again, we don't care. We're not looking for RMLR to predict the value of the future RMLR, right? The whole point of the RMLR is to be able to look at it and know what the future direction of the RMLR is. Where that number is printed on any given day, terrific, wonderful. By the way, it will also change during the course of a day, which is a long time. 24 hours is a long time. So the value will change, right? So if the direction is up, it will generally stay up unless there's some crazy outlier that pulls it to the downside. And what will differ while it repaints during the day is just the value of where that RMLR actually is, but it'll be to the upside. Same thing if it's to the downside. Same thing if it's sideways, right? But it's, it's going to just repaint the number as the action happens throughout the course of a given candle. It doesn't matter what time frame you're looking at. I'm just talking about the daily as an example because of the topic of the video, right? Is it going to be that it looks to hit down towards 86K, which is around 7K below where it is now? Or is it going to hit up about 7K to get back to about 100K? Well, again, like I said, if you look at the actual RMLR and projection boss information, you will see pretty clearly what it is likely to do. And if you look at the VRE targets on the monthly and the weekly and the daily, and the Laplace and normal distribution targets on the 4-hour and the daily, it is kind of clear where it's moving intraday on any given day. Jeez. Oh, I'm in northern Israel, and sometimes you get hit with reminders of certain things that are only existing in places where you have terrible, enduring conflicts. I just walked by anyway, don't want to get into it. But so the daily time frame of Bitcoin, does it look more to the downside or the upside? Look, at the moment, it's actually looking like it's going to be set up for a nice week of movement because of that intersect happening. The weekly close happens today because it's a Sunday, which means the weekly open happens today because it's a Sunday, right? So you're going to get new weekly leading information this week. And if you see the weekly, look at the power mean ribbon, for example, you'll see that the asset did the do and did test the top of the power mean ribbon this past week very nicely. Now, does it mean it has to test all the way through it or even just to the RWT or anything like that? No, it doesn't have to. Can it? Absolutely it can. Is it a probability? Yeah, of course it's a probability. Right? Don't discount the probabilities. That's the reason we trade low time frame probabilities, by the way, at Alpha Trading. Yes, if you're trading options, sure, then you're going to trade, unless you're trading zero data expiry, like zero DTE, as they call them, options, then you're trading usually options that are somewhere like 45 to 60 days, right? Unless you're trading those crazy British or European options where you can't get out of the options trade, right, until the end of the trade. If you're trading American options, you can get out of the trade whenever you want until the expiry, right? That doesn't matter. You put on a strangle, iron condor, whatever you want, right? And you could roll things over, and you could do all kinds of creative things with options, right? To basically limit your risk. That is the beauty of trading options. And the only fee you will pay, if you don't win and you don't buy, therefore, at a losing price, is you'll pay the fee, the premium, for the privilege of having had that options contract. Right? So you don't need to buy the thing at a loss. And no, you don't need to sell the thing at a loss. But you need to pay the premium fee. But you got to be careful, because those premium fees can be quite steep, right? So it depends what you're trading, depends what kind of asset you're trading options on. Always know the premium fees, the risk reward. Make sure you're managing your risk properly. And of course, you can use the future-looking tools of alpha trading, including the RMLR, including the probability or projection bosses. Right? Those little things that look like standard deviation bells looking out into the future. Right? People call them cones or bell, whatever. To me, it doesn't look like a cone. It looks like a normal distribution bell, right? The bell curve, because that's what it is, projected out into the future. And but yeah, we call them the projection bosses. And we've just made one, which we will release very shortly to our subscribers in Alpha Trading. Our math guy and dev guy, our leading math and leading dev brains, what we call the Brain Trust, have made an updated version of our projection boss for traditional non-continuous markets. Why is that important? Well, because calculating future projections on non-continuous markets is very different than calculating them on continuous markets like Bitcoin or Litecoin or any crypto you can shake a stick at, right? That operate 24/7, 365, and 366 on leap, or is it leap year? Yeah, on leap years. So they have successfully managed to make a properly built, correct math, future-looking projection boss for non-continuous markets, which means all traditional stonks, commodities, forex, whatever, all that stuff, right? Gold, oil, whatever you're trading, silver, copper, rice, wheat, soybeans, Tesla, Apple, Facebook, Microsoft, or any of the zillions of stonks in the world. You now have a tool through Alpha Trading. Where am I? I am in northern Israel, BCM, where nowadays we currently have quiet, thank God, because for about a month we've had a ceasefire with their all too often angry neighbors to the north. So they've stopped sending complaint cylinders our way for the past month, and hopefully it will continue well into the future, and may peace reign. A real and lasting and forever peace. That's what I would like to see happen. But anyway, yeah. So what is it exactly, right, that makes the projection boss so special? Well, it shows you the probabilities above the mean and below the mean, right, of the distributions of either one standard deviation, two standard deviations, or three standard deviations on the normal distributions, or the first, second, and third Laplace distributions of similar mathematical value, 68.3% or 68.2%, 95.4%, 95.5%, and 99.7%. Right? Same thing as the first, second, and third standard deviations of normal distribution, just where they are on the Laplace scale as opposed to the normal distribution scale, which typically sees Laplace tighter at the first distribution than the normal's first distribution. Sees them kind of close to each other on the second distribution. And at the third distribution, typically Laplace is wider than the normal distribution. It's not always, but it's usually like that. It depends on the math, but that's typically how it goes. Right, which is why Laplace's curve looks almost like, like a squished version of a normal distribution curve. A normal distribution curve, kind of looks like this, and the Laplace looks like a squished, like Eiffel Tower style, right? Where the lines go like that, right? Anyway, so is there a usefulness to the future-looking indicators like the projection bosses and the RMLRs that alpha trading provides? Well, you tell me. Is it useful to know something about the future with high mathematical precision and accuracy, right? And a very high success rate, like extremely high. Is it useful to you to know what that particular thing about the future is telling you, like where the distribution models are pointing to from any candle you place it on into the future, right? So let's say you have a 60-day trade on an option, right? Or even a 45, whatever, it doesn't matter. And you want to see at least 60 days into the future from now so that you can know when you might be in the money, out of the money, whatever, on your options trade. Well, with the distribution models, you can even stick it on the current candle, by the way, right? It will show you the distribution model, whether normal or Laplace, looking into the future, 60 days, you can look 120 days, 150 days, you can look 1,000 days. Doesn't matter. Sketch it out. See how far you want to go. It doesn't make really sense to sketch out 1,000 days, in my opinion, because if you're doing a 60-day trade, what do you need to see beyond 60 days for? Unless you're going to do a rollover, at which point you would do that at some point during the lifetime of your trade when you're still actively managing it. And you would do that by looking at updated information. So yes, you would still continue to look at it with the original distribution model projection, but you would also put it on the newer relevant ones, right? Right. Now, where should you initially target putting it? Something like that on? Well, if you're trading 60 days, right, or 45 days, doesn't matter, you typically want to put, right, your entry, your exit on a reversal candle, right? Like when it's starting to, that's where you want to put your projection anyway. But you can put it anywhere, but generally speaking, you want to make that entry, right, on or just before, but preferably on that reversal candle, so that it doesn't continue more against your direction before it turns around and goes in your direction, right? You want to catch it the moment, or as close to the moment as it goes in your direction as possible, for obvious reasons, right? And then you want to ride it out, and hopefully it continues going in that direction. But of course, 45 days, very long time. That's why you got to manage your risk accordingly. And if you see that you're hitting targets of profit during that time, even earlier than expected, right? And if you don't believe that you have reason to stay in, given the leading information, right? Not just those two indicators I mentioned here, but the AVR, the entropy, the returns oscillator, the variance, the DLP, the fish, right? And on and on and on. The power mean bands, whatever it might be. If you don't see that you have reason to stay in, you should get out in profit, right? And God forbid you're at a loss, you should get out, right? You should not stay in trades that are at a loss. Now, I realize in options you can reduce your losses by staying in the trade and flipping things around and doing all that. It's fine. If you're, somewhat not a beginner options trader and you know how to do that sort of thing, congratulations, you are in a very small percentage of human beings who know how to do that sort of thing. Most people don't. They see loss, so they panic, and they make their situation worse, usually. Right? They double down on the error of their ways rather than reducing their risk or getting out of the trade. You don't want to double down on the error of your ways, okay? If you make a mistake, you fix it one way or the other. You either get out of the trade, or if you know how to risk manage properly and reduce your loss, right, by countering your model properly during the lifetime of the options trade, you can do that. But again, if you don't know how to do that, you're not well versed in that sort of risk management, the best thing to do, generally speaking, statistically speaking, is to limit your loss by closing your trade. Now, why is that? Well, can't things turn around on a high time frame like a daily? Absolutely they can. But they can also not, right? You can start seeing your trade position going in the red, even on a high time frame like the daily, and suddenly just continue to go that way for days, weeks, and months on end. Right? Look at Bitcoin. Look at Bitcoin November 2021. What did it do? It hit an all-time high in the 60 to 70K range. Like it was almost 70K. And then what did it do? It proceeded to dump out for pretty much a year. Were there days when it went up? Sure, plenty. But there were more days when it went down. And it didn't get back up to that high until this past year, right? November or something, or whenever it was. Actually, earlier, like in February or March. And then from there, it dumped out for like 6-7 months, right? From like March until basically November. And then pumped up and smashed through the highs again and went up to the 100K level. But that took a few years, right? From November 21 till March of 24, just to get back to where it was in November 21. That's a long time to wait, right? And there's always a possibility, especially if you're not trading Bitcoin in particular, which even that could go to zero, you could say long term, right? Everything goes to zero eventually, right? In a couple hundred years, maybe Bitcoin will go to zero. Maybe it'll be sooner than that. Who knows? But you could be trading some stock that's very hot today and becomes moot tomorrow. And suddenly its value crashes through the floor. Maybe it doesn't get exactly to zero, but maybe it goes from like $50 to like $5. And you got in when it was like 30 or 40 and you thought you were the bee's knees. But turns out you're just another guy getting wrecked or another girl getting wrecked, carrying a heavy bag or some stonk. You don't even know what they do. You just saw information about it and figured, I'll join that bandwagon. I'll trade that thing. I'll long options or whatever. Right. And you should have been, selling it. But you didn't, and now you're holding a big heavy bag, right? That's just an example. Happens to people all the time. Right? That's why, if you're trading options, ideally you are trading, it's up to you, yeah? If you prefer British options, by all means, enjoy them. To me, that's crazy. Why would I want to take a trade where I cannot get out of the trade? I have to wait for it to expire. And then whatever happens, happens. Like, that is seriously degenerate gambling. Right? If you're under a bad trade, you should be able to get out of it. And just pay your premium and walk away. Right? That's how it goes. right? That's a normal trade. But no, British options are riskier than that, which is one of the reasons they have slightly different regulations and enforcement about who can and can't trade options, even though Great Britain tends to be far more open to things like, wagering, right? Betting, gambling, sports betting, casino betting. They're far more open to that kind of thing in the United Kingdom across the British Isles than they are like in the U.S., where it's much more tightly controlled, generally speaking, right? Where they consider that sort of thing to be a bad vice, and all this kind of unofficial moral majority, moral minority nonsense happening since decades. Like, it's ridiculous. But in the British Isles, it's much riskier to trade options. Or on a British trading site, it's much riskier to trade options because, again, British-style options don't let you get out of a bad position. You buy a position or you sell a position, you're stuck in it till the options expires. And let me tell you something. If you're watching your asset go the wrong way for 2 months because you made a dumb decision 2 months ago, that is not fun. That can be extremely painful. In fact, it can be worse than painful. But, there are people who lose that kind of money every day on trading options in England, obviously. And they do it willfully, which is even more insane. Even though they know there are other forms of trading options available and there are other forms of trading available. And yet it remains an incredibly, wildly popular form of trading in Britain. So, what do they know that other people don't know? They don't, actually. They don't know what other people don't know. They are led to believe that this is a smart way to do it. And they are wrong. They are being misled by the large money houses who may or may not know better. The smart ones do. Right? The real smart money, they certainly know this stuff. The people who think they're smart money but aren't, they don't know this stuff or they don't know it well. And the people who are the retail world, there are extremely few people who know this stuff. Right? If you were watching this video, you are one of a tiny handful of people who even knows any of the terms I'm talking about just because I'm mentioning it to you. Or maybe you know these terms, and good for you, you're one of those rare people. Or maybe you've just discovered these terms because of this video. Or you've heard these terms but never realized that they're relevant to trading when in fact they're the only things that are relevant to trading. So bear that in mind. And, don't get wrecked when you trade. Right? It's not worth it. That's going to do it for now. If you guys want to join the live stream on Alpha Trading's Discord, go to alphatradinghq.com/Discord, and that's Monday through Saturday, starting at 11 a.m. U.S. Eastern Time. 6 days a week, we do those. Sundays, we don't do one. We did a few Sundays, but at the moment, we're not going to anymore. Maybe we'll change that in the future. Who knows? We'll see. But 6 days a week, there's plenty of time for you to learn how to trade. And that way you get your Sundays to trade market close, market open, without the live stream. But yeah, come and learn. Learning is free if you want. Right? If you want the private tutoring, you can get that. Either myself or one of my fellow co-founders, probably Bilbo, will be your private tutor. You can just come in and check out our shop channel, see what we have available there. The private tutoring is frankly amazing, according to our students. who have gone through it and have become successful traders. And we sell it to you for a ridiculous bargain because we're actually not looking for that many people. And we know that not many people want to even learn. So there's very, very limited space. I don't think I would take on more than 10 students at any given time. And if that, honestly. But why? Because the rest of the time I'm busy trading and living life, and I don't want to be a teacher full time, right? Like, that's not what we do. We do teach a lot in the Discord day to day, just by chatting and showing charts and stuff and answering questions and doing the live streams. But I don't want to spend 8 to 12 hours a day just teaching people when I could just be trading and living life. So that's gonna do for now, folks. I'll catch you guys in a little bit, probably about some other topic. Till then, happy trading. Peace.